what is long-term care insurance and how does it work?
That's right. Well, traditional long-term care insurance, Nick, is really pure insurance, also known as standalone long-term care insurance. It's going to work similarly to like your home or auto insurance. There's not an added benefit if you don't need care versus like a hybrid policy where there is an added benefit. Okay, this is simply pure insurance. It's going to pay benefits if you're unable to perform without substantial assistance from another person 2 out of 6 activities of daily living. Okay. These are transferring, toileting, bathing, dressing, eating, or continence. So that's a physical impairment. Or if someone has a cognitive impairment and needs substantial supervision. So that's an Alzheimer's, a dementia, a Parkinson's, something like that. And then their expected need of care is more than 90 days. So that's when a qualified traditional policy is going to pay out. It's really the most cost efficient way to purchase a long-term care insurance policy because you're getting really the biggest bucket of money for the smallest amount of premium typically, because you're not paying for that extra benefit, right, of life insurance or cash value from an annuity. So it's very cost efficient. It's also going to provide tax-free benefits. Who doesn't like tax-free benefits? Right?
I'm all in on tax-free benefits. Let's go. You had me at tax-free.
That's right. From a financial planner's point of view, they love that. And so it's going to provide either a daily or a monthly benefit over a period of time. And that period of time typically is going to be between 2 and 6 years. But we do have a carrier on the traditional side who still offers lifetime benefits. There's also going to be an option to purchase inflation protection, which means your policy has the ability to grow over time, which is important, especially if you're younger. There are also shared benefits available. So if you have a partner or a spouse, you are able to also share benefits with them. Partnership eligibility is pretty important too, which we're going to touch on a little bit later, Nick, but the partnership policy is really, really important that only traditional policies have. Okay. So we'll get to that later. Also, traditional policies are generally going to be reimbursement policies, although we have one company that will allow and actually pay out benefits 25% in cash instead of 100% reimbursement. But this means that you are paying for these invoices or these care expenses, and then you're getting reimbursed by the company. So that's how that most traditional policies work. Premiums are not guaranteed with traditional policies, but current policies sold do have stable prices, unlike previous policies that were issued before. And the reason behind this, Nick, carriers have more data, right, than ever before.
Yeah, when they originally priced, they wildly miscalculated what the cost of long-term care would be or how long people would need care, correct?
Exactly. They didn't know. They were really looking at disability policies. They were looking at life policies, or they were looking at home and auto. And so they were looking at data, and it just wasn't matching up from how actually policyholders were behaving once they had a long-term care insurance policy. So long-term care insurance policyholders, what are we doing? What are they doing? They're holding on to their policies a lot more often than other types of insurance. So we actually have a less than 1% lapse ratio in the long-term care insurance world, which is unheard of in any other insurance policy. So people are holding on to their policies, people are using their policies, and they're staying on claim longer than what was originally expected. So because all this, they have more data, they are pricing them more accurately, but still premiums are not guaranteed to stay the same. Now, along with that, with premiums, we do have, most carriers are going to offer like your typical, monthly, quarterly, annual premiums. But we do have 2 carriers that offer a 10-pay option, meaning you have 10 payments and then your policy is completely paid up. And we do have a carrier that also has a single pay as well. But typically, your monthly annual premiums, that's going to be pretty darn standard. Okay. The underwriting, okay, that's as far as them assessing the health risk. This is going to be the strictest health underwriting compared to any other product when you're buying long-term care insurance, meaning it's going to be harder to health qualify for, particularly if you're looking at like a hybrid policy where they combine life insurance. Health and medical history are really important here. As far as ages go, the max age typically is 79. So, if you're 90 years old, you're not getting a long-term care insurance policy. It's just too late. But the younger you do it, the healthier you are when you do it, the less expensive it will be and the more options you will have. So health is really important here, Nick.
Yeah, absolutely. It seems like there used to be maybe 15 years ago in the industry, people used to start talking about long-term care at 60 or 65. And now that's certainly, I think, gone much younger, right? Starting to talk to people in their 40s about long-term care.
Yeah, you're right. That's actually absolutely the case. We have some carriers that actually issue policies much lower than 40 years old. So it is important to look at this when you're younger and healthier and you're financially obviously able to afford it and to do it. It needs to make sense. As far as, what kind of carriers, how many carriers are in this market, there are less than 10 carriers that sell traditional long-term care insurance. And some of those options, they are captive agents, meaning they only sell their proprietary product. They don't have the ability to look out in the marketplace and see what are their options, what other carriers are available. So, they're on 100, they're on a bunch like there used to be, but the carriers that are in the market are very dedicated to the market, Nick, and they have a solid policy. So there's still definitely high quality options out there. Some other important things to consider when we're looking at traditional and even just long-term care insurance in general is that you're able to stay in control of your care options because you're able to receive care wherever you call home, at home, in assisted living, adult daycare, a family member's home, a skilled nursing facility if you have to. But again, you're staying in control of your care options. And that's key, right? Doesn't everybody want that? You want to be able to choose what you want. And so you can do that with a policy. A couple other things to consider, Nick, with a policy is other benefits. So you've got care coordination typically, respite care, home modifications, caregiver training, other really valuable things, resources that are coming with a policy. And traditional policies often have these things included. On top of that, which we're going to get to in more detail later, potential tax deductions. So, right, as a financial planner, or if you are an accountant, your ears are probably perking up about this, but definitely some things that are available. So, Nick, let me kind of recap here. With traditional long-term care insurance, let's talk about the pros. You've got pure long-term care protection, right? Valuable benefit for the least amount of premium. You've got plan design flexibility, being able to add things. You've got shared benefits for couples, and you've got partnership eligibility. What about the cons? Premiums are not guaranteed. Unless you actually do a single pay, they are, right? Because it's just a one-time payment. But actually, one of the carriers that has that 10-pay option, they do fully guarantee that 10-pay. So it depends on, again, what carrier, what mode of payment you're doing. Another con, if this is important to you, there's no cash value, right? It's just simply insurance protection. And then there's no benefits if long-term care benefits are not used. Although there is a return of premium rider available, sometimes depending on the policy, but it does increase the cost of the policy quite a bit.